Hey there, Blockhead Traders. Here at Blockhead Traders, I must inform you that we are not financial professionals. Nothing we say should be considered financial advice. We offer our own thoughts and opinions to you, the viewer. We expect you to take these opinions, form your own financial conclusions, and make your own financial decisions. This is Blockhead Traders for the week of April 13th, 2025. And in this week's episode, we are going to take a look and unpack a lot of the market craziness around tariffs. We'll touch very briefly on what a tariff is, and then we'll kind of discuss the here's your tariff and now it's gone that is rapidly unfolded. And who knows, by the time that this comes out, or by the time you actually click on it and watch it, the tariffs might be back and they might have gone away and they might be back. And who knows how many cycles we've been through. But it has taken the market on one heck of a ride. And so we are going to focus on a little bit of mine and Viper's reflection in this week's episode. But before we hop to that week's content, I want to give a shout out to our Discord, link in the description below. You can hop in there, say hello to myself, Viper, some of the other Blockhead traders. Love to hear what you're trading, love to hear what type of content you want to hear about. Also, you can find a link to thetagang.com/sprocket888 as well as /ViperXL007, where each of us post our equity trades, the good, the bad, and the ugly. Last, this is available in an audio-only format wherever you get your podcasts, so look us up, subscribe, and if you can't find it there, let us know, and we will get it there. But let's hop to this week's content. Viper, holy guacamole, has it been one heck of a ride in not even a full week. We're just kind of approaching about a week by the time we're recording this. I guess you could say it's being recorded a little bit early, but I guess this is technically our time that we normally record this. And tariffs, you know, forever and ever and ever. It was inflation, inflation, interest rates, inflation. And then it was a little bit of a tariff. And on April 2nd, which was just last week, the President of the United States called it his Liberation Day and announced a large sweeping tariff policy across basically every country in the world, saying that the United States is going to impose tariffs on these countries. And so just for those of you that might be, unaware of what a tariff is, I'm not sure how many of those people you are, since we have 7 people that watch this. But a tariff is effectively a tax on goods that are brought into a country. So if you make a widget in another country and you want to send that widget into the United States can say, hey, we want to tax widgets coming from this country, or we can tax a product no matter where it's produced, and say, if you want to bring that into the United States, you're going to pay us, 10% or 20% of the value of the thing you're bringing in. And what that does is it is supposed to kind of de-incentivize the consumer from purchasing that product, where that complementary widget or similar widget might be produced within the United States, and that if it was produced within the United States or another country that doesn't have the tariff, would be cheaper, presumably, as long as that company can doesn't pass on passes on the price of the tariff. And so that is the theory behind the tariffs. The current president believes we have a, trade deficit, which means, we accept or give away or bring in more product, I should say, than we produce ourselves, thus creating a deficit. And he believes that having tariffs out there will reduce this deficit. Now, why is this bad for the stock market, or why does the stock market care about tariffs? Well, because tariffs are effectively a form of tax. And companies run on money, and companies run on profits. And so companies also have a very global supply chain of things. And so companies are very interdependent upon other nations. Some companies bring in all of their product from other countries, even though the company might be run from the United States. And what this basically does is it effectively raises the cost to produce whatever it is that they produce that relies on material that comes in from outside the United States. And that directly hits the bottom line of these companies in one of two ways. The first and direct way is if they choose not to pass on the cost of that tariff, but wholly absorb it within their balance sheet, that completely eats into the margin or profit, thus making a company less profitable. Now, the other thing they can choose to do is pass on all or some of the tariff to their consumer, whoever it is that is purchasing from them. Well, what that will effectively do is drive up price, which could potentially drive down sales of whatever it is. And if your sales go down, but you maintain profit margins or maybe even reduce profit margins a little bit, that's still going to affect your bottom line because you're going to bring in less revenue. And that is really why it matters with companies. And why did the stock market really take a lot of this as much as it did is because the tariff policies that were put out there were largely considered very anti-growth from companies. Companies are going to have to invest a large amount of capital to deal with these tariffs, whether that means shifting their supply chains or modifying their operations or what have you. That is the long and the short of this. If you want to learn more about it, go Google it. I want to get more to the price action and stuff that happened to unfold and give a little bit of my reflection on what I learned. So, Viper, really what happened is, I would guess, just an absolute, bloodbath in the markets from a selling perspective. I don't know if you have a chart that we can maybe pull up here while I talk to some of the unfolding events, but let's pull that up. There we go, Viper. So walk us through a little bit of this price action here on the S&P, and then, we can get to some of our reflections.
Yeah, so this is, like you were saying, April 2nd. So this was kind of the start of it when things just went turbo dive to the ground. And you can see that these are trading days, and it was just back to back to back, ridiculously massive bloodbath days. Just a massive gap down on open here, slow bleed out of the day, massive gap down to Friday, and then Friday to Monday was another gap down. And so it was, as you would expect the markets to react to some of the strongest tariff policy since, I think, pre-World Wars, back but when tariffs were a key function of the government. So massively down. And then there was this little foreshadowing event, which you can see right here, of this little pop. And this was not leaked. It was just a rumored story on Twitter that the tariffs were going to be postponed. And so the market reacted accordingly, and things popped. But then it was found out to be that was fake. So we go forward a little bit, and then all of a sudden, rip. And this is today when we found out that it truly was paused. The tariff, the most significant tariffs were postponed. And so you can see things just went ballistic. I mean, truly ballistic. Let's grab some numbers here. I mean,
yeah, what's the magnitude of that move? It was big. I want to say it was close to 10%.
Yeah, 10% here and that's the S&P 500 going 10% in a day, which is absolutely bonkers. So, of course, emotions are running high, and everybody's like, oh, we're so back, and this is awesome, and it was all, okay, now we can just go back to up only and all that stuff. So, as always, it's really important to call out our favorite saying, which is news is noise, even extremely loud news like this. And so what we mean by that is now, so just looking at the chart zoomed in here, we're on the 5-minute, and it's like, yeah, this looks crazy good. But if we go back out to the higher time frame, I think the 4-hour captures this really well. And we can see, if we look over time here, not a whole lot has changed. So we obviously had this very long, I mean, it goes way back in time all the way to 2020, very long run up. And then now through the power of hindsight, we have a very clear break from all-time high where we put in a new low, and we had a failure here. And essentially we just put in a new low. We just turbo ran it at extra super fast speed. But even the turbo dump and today's ridiculous pop, none of that has been on support, and that's a very key thing with price action. Is when you get that turbo pump and it's not coming off of support and it's simply pumping into resistance, that's not a time to buy. I mean, there's times to buy, like there's scalps or swing trades where, you could have captured that 10% move. But now that that's done, there's nothing signaling it's time to buy long-term yet. And so the first thing that jumps out to me right away from a price action perspective is right here in this range. I think this is the key failure range. We came off of all-time high. We tested, we bounced here, we found support, we broke above it, and then we came back in here, and guess what? We failed to get support come out of here. So that's the current failure. So when I say long time frame, let's not even say that trend. When we reverse the trend to going back up, you can't reverse the trend until you gain what you've lost. And right now, this red zone is what we've lost. And all we did was we turbo pumped right to the bottom of it. That's not to say it's immediately going to reject. We absolutely could get a little more push up into this zone. This is clearly a high liquidity zone. So we don't know if it's able to be flipped to support or if it's going to maintain resistance until we actually go into it. So it certainly stands to reason that we might get another green day tomorrow or sometime this week that actually pushes us into this zone, and we actually start to let the buyers and sellers battle it out. They can't battle it out until we're there.
Yeah, so Viper, this whole trend here has been just a monster wallop for me. Can you qualify or quantify the drop that we had from April 2nd to the 3rd, and then 3rd to the 4th, and 4th to the 5th?
Yeah, so let's take a quick look at that. So April 2nd to the 3rd, the opening, so we gapped down 3% from April 2nd to the 3rd. And then we closed the 3rd down 5% total from the 2nd. And then 3rd to the 4th, we gapped down overnight another 2%. By the end of the day on the 4th, we were down 6.5% on the 4th. And so then Monday, we actually went another 3 or 4%, actually 5% after hours, because in the Discord we were watching it Sunday night when futures opened. We peaked around 5.5% down, but that all kind of washed out after hours. We opened up a little bit flat, and then Monday was the reversal day where we kind of chunked around before we undid all of that wild acceleration.
Yeah, so that's really the first takeaway that I want to kind of throw out there for myself. A lot of people are like, "Oh my gosh, I lost my shirt, or we sold all this stuff." And one of the things that I have learned over the years is the market downside when a drop like this comes swift and it comes deep. And it doesn't happen, like every year. But it is any moment it could kind of come. And going into this, we were feeling it. There was discussion in our Discord that things were coming. I definitely called this one wrong personally, because I said, "Oh, Liberation Day, that's going to be a big nothing burger," because everybody knows tariffs are coming. But I think nobody really quite understood the breadth and the size of the tariffs. But what I mean by that is, one of the trading things that I personally ran into is I started getting margin called, basically, where the amount of buffer that I had given myself in my trading account was gone, and that's something I try to protect for, and I need to keep working on my simulations of this. But I believe I was really positioned to absorb about an 8% drop in the market. And an 8% drop in the market is a pretty considerable drop. This one went deeper than 8%. And I was basically, after the first day and a half is when I started getting calls or getting brokerage alerts and things like that. And that is just an absolute sinking feeling. And I want to just touch on that because I think it's real easy to look back and say, "Oh, I'll never feel that way. Oh, I'll never get in that position," because that's kind of the view that I've had historically. Now, I felt this before in other kind of drawdowns, and so I was very much more ready for it this time, at least that feeling. But to be honest, I want to touch on this emotional feeling that you get because it is something that if you're not prepared for and you've never done, it will rip you apart. And what I mean by that is it was just maybe 2 weeks ago, I was having a conversation with some friends saying, "Hey, things are going really well for me in my premium selling. I have up X dollars so far this year." And in that first day and a half, I completely, on paper, gave back every penny that I had earned in my account. And just to see that go away, now it was record numbers for me personally that I had brought in. And then to go further than that, you start questioning yourself going, "Oh my gosh, am I going to come out of this? Is this the right thing? What do I do? Do I panic sell?" Right? So I have all these positions that are red. Do I dump them? How much more pain is going to come? And that psychology is, I believe, the most difficult part of trading because it is so visceral. It's so real. And that is where understanding mechanics really come in. And I went to that price action of levels because that is one thing that has been incredibly consistent in all the types of news and noise that we've come across is really what happens in that price action. And all these events are really accelerants to that price action as Viper was kind of showing on the chart. And so I pulled out the charts, pulled out the markers, and I said, okay, this situation, here is the next levels that we could potentially go down to. If we hit these levels, it's an additional drawdown on my account of, X dollars. But what do I think about what is driving this? What is my strategy, right? You only abandon and change your strategy if something is fundamentally different or changed. And that's really where I said this is not arbitrary, but it's an artificially created binary event. It's not even a binary event like an earnings that actually has some consequence to the underlying fundamentals of a company, right? It's not a drug release report coming from a pharmaceutical, which impacts the fight or flight of a particular research thing, right? This is somebody sitting in a position of power said, "You know what? I want to put a tax on this guy. And you know what? I like to make deals because I thought the probability that this guy putting the taxes on wanted to make a deal means these things could go away just about as fast as they appeared." And so for me, it was really about hanging on to my trading strategy because it wasn't changing. And that's really what I calculated. And I actually had to pump additional capital into my trading account because I was down and I wanted to hold on as the storm is ripping through. And that's really where Viper can probably, there was this fake news story, right? And I was actually really kind of glad that fake news story came out. Maybe Viper, you can zoom in there on the chart of that fake news blurb candle. Because this came out, I think it was actually Monday where it came out. And the reason that is so important to me and what it helped is, well, it wasn't real. The market didn't know it wasn't real. And so that jump and I'll throw it up here on the screen to see that. That jump validated that as soon as a rumor was out there that these things were going to get peeled back, we were going to get a face ripper of an upside. And so that helped me give confidence that no, my strategy is still set. Hold on to the strategy. This is the storm that I say every week. You have to be ready for this, right? This is the consequence of the trading strategy that I deploy. And so that's, one of the things that was in there. And so I'll kind of pause here a little bit, Viper, because my takeaway from this is really, do I need to work on my simulations as far as what the max drop is? Yeah, maybe. Am I going to change a little bit of the buffer that I keep? I don't think so. And the reason I don't think so is because there's a balance that you have to strike between the buffer that you leave in your trading account versus putting that capital to work. And I believe the amount of times in which a drawdown like this has occurred, and if you roll back in history, you can count maybe 3-4 times in the past, several decades that this has happened. COVID was one of them. The financial crisis was one of them. The crash in 1987 was another one. These are these major drawdowns. And so for me, I'm going to kind of absorb that and probably not change anything. Just be more aware that it could come and try to position for things. Viper, before I get into some of the stuff of battling back, because as soon as we're down, it's time to take advantage of things. But what's a takeaway that you had from this massive event? Did you learn anything? Are you going to do anything different? What was front and center for you?
All right, there was a lot. So I experienced a couple different things. I experienced some really big wins, and then I experienced the emotional, so kind of the opposite emotional effect of what you were discussing. So I've 100 times felt the emotional side of what you were talking about. Which I did want to loop back and touch on real quick, just to say that that's a really important reason why we say that it's so important you have skin in the game, but you very intentionally position size and risk mitigate the size of that account and that exposure, because there's so many things that you're just not going to be able to synthesize in your head of how you will react in a certain moment. And honestly, I would say, say you have X amount of money that you're like, I'm ready to start trading with this amount of money. I'm willing to be pretty aggressive and say 5 or 10% of that amount of money max is all you play with until you hit some sort of dramatic loss scenario, some sort of dramatic market event that moves against you, just so you can really start to process those emotions. And the first time it happens, that's just the reality wake-up call. That is not the last time it's going to happen. That's just hey, here's this thing you're going to deal with, and you're going to deal with it over and over and over again. And so only until you start to hit those multiple times do I think it's okay to start thinking about increasing your position, your exposure size. So there was a lot of that confirmation of the way that I've scaled in, over these 4 or 5 years, however long we've been doing this, where I'm at a pretty decent exposure size now, but I also process these events better, but not best, because it just it hits you different every single time. And so in this particular case, I was capitalizing on what I'll say is a less emotional strategy, which I've talked about. That's probably the wrong way to say it, but for me personally, and obviously we've talked about how I've been buying options, where Sprocket is captain sell options. If I ever buy his options, I'm doing something wrong. but to my strategy. But the reason I say that's less emotional to me personally is because, like we've talked about, when you buy an option, your max loss is immediately realized. The moment you buy that, you immediately pay whatever you paid for that, and you will never owe or lose any more money than that. The play is to not lose value on whatever you purchased and to capture value add to it. So for me personally, that is a less emotional vehicle because I don't have to consider these scenarios where the drawdown just keeps growing and growing and growing and growing. And so in this particular case, I was buying puts on the way down, and they were just they were printing almost instantly. I mean, there was the third, I think it was April 3rd, market open. There was a 512 strike on the SPY that I almost bought on market open, but I was like, $300. Actually, before market open, it was priced at like $1.12. Nobody got that price because market wasn't open yet. But when the market opened, it hit like $3.50, $4, something like that. And I laughed about it, and I was like, "Oh, yep, there it goes." You know, that was used to be $1.12. Oh well, you know, such is life. I'll just keep an eye on it. And then before long, I ended up buying the 493 strike for like $500 or $5. And even then, like I was like in my head, I was like, I was just laughing that $3.50 was too much, and then I just bought a further out strike for $5, and then literally within minutes, that thing just started rising and rising and gaining value. And so I did that essentially back-to-back days. I did that similar play. And then when we got to the bottom on Monday, it's kicked in of like, hey, this is easy mode. Like I just buy these things and they go up in value. And yeah, sentiment, check around the room, it's still pretty bad. So we're just going to keep going down. And so the mistake that I made was being emotionally comfortable. And there was something that one of the members in Discord has said multiple times, but nothing goes down forever. And it applies in the other direction too. Nothing goes up forever. And so I definitely fell into that trap of emotional high of like, hey, this is working. Let's just keep doing this. Are we all cool with that? But no, nothing goes down forever. And so I ended up giving a decent amount of that money back that I made on the way down because, that's rude for me to keep it. So I might as well give it back to somebody. So, in a similar vein to what you learned, I learned that there's just no place for complacency, and everything can literally change in a moment's notice. And that's part of what's really annoying about this particular event, this particular market that we're in, this reckless wielding of extreme power, as some could interpret it, is, the announcement of the tariffs are paused, and then an almost instant, at least 3 or 4% jump was instantly. And like all of a sudden, what happened? Where'd everything go? So always have to be on your toes on a moment's notice. So I took a lot of that. The other thing that I noticed, and this we'll just go over real quick, if we hop back over to the chart, the other thing that I wanted to point out is we talk about the elasticity of the market all the time. And this is a quintessential example of that elasticity. The market does not like to, just like any rubber band, the market doesn't like to be stretched and held out at tension. And so in this particular case, we had ridiculous tension, and then we snapped right back. And I know we talked about that already, but what I think is interesting, and important to call out here is, like I said already, we were clearly in a downtrend already. So when we have this failure here, we are very likely to lose the range. So what we never know, what nobody ever knows, is to what degree you will lose the range by. I mean, there are legitimate price levels that are probabilistic, but once you lose the top of the range here, the only thing that we know, quote unquote, for sure, no, most likely is that we will make a closed candle below the range somewhere, and then we will try to test the range at some point. So that's the only thing the statistics and probability tell us is likely. So there is an alternate reality, I believe, where maybe we still drop down, but we only drop this far, and then we come back up. We do that because the elasticity was not stretched to this limit here. So I feel like this was a good, and I mean, hindsight always lets you prove whatever point you want to prove, but I think this is a good little case study on that elasticity factor and the fact that, nothing changed of the trend. We made the low. We're testing the bottom of it. How deep you go, nobody really has that crystal ball. And that's where, again, those news events, those accelerants, they can stretch that rubber band harder than just a normal day. So, and the other thing that I learned that I took away was basically the power. I don't know, we talk about hedging all the time, but I really felt the power of hedging in this moment because, like I said, on the way down, those puts that I was buying on the SPY, that's a synthetic short of the market, and because across my whole account, so much stuff was losing value because it was going down, while these puts that I had bought were literally holding my account value. They were just, the meme of something just holding up the world. Like my account as a whole was dropping very little, and like I was just perfectly holding me there, waiting. So that was kind of a little tiny aha moment of like, wow, that actually feels pretty good. Of like, I don't care about like needing to turn a profit right now. I'm not bleeding out, and that feels pretty good. So
that's why people buy those things.
I know. So that was something that I think is worth exploring in further detail on future trade ideas and whatnot. Is I want to bring more of that hedge into my strategies where applicable.
Yeah, for sure, Viper. I mean, that's the beauty of the put. That's why people buy them. They are an insurance policy. They are the thing that keeps the portfolio floating, and that's why schmucks like me go around selling them, because people love to buy them. And when people love to buy them and they're in high demand, the people like me can sell them out there and pull in a lot of premium. And if I'm okay taking that risk, because maybe I'm okay owning at a particular strike price, like that's what makes it a symbiotic relationship there between the buyer and seller of those. But Viper, I want to jump over here to a different chart, and I just want to call this out because I think it re-emphasizes this whole price action. Because I'll say in so far since I started this show and started my journey of things, I think one of the biggest learnings that has really helped me in the option selling is every day I learn more about price action and the more reliable and steadfast that seems to hold. And so what I pulled up here, this is nothing that I actually recently drew. These are sketch marks and lines that I had previously done on charting the Russell. And I cannot say enough about, when you're sitting there with your, everybody loves to pull out their mobile phones and things like that. Shout out to TradingView, I guess. Mark up a chart, and then it stays there. It's in your account. It's marked up. And then when you go to trade something, you're like, oh, look what I've marked up. Oh, this is nice. Because if you start marking this thing up in an interesting way, here's something that can happen. What I've got here is the Russell over the past, several years. And what I really want to call out is this range here from about the mid 22 to fall of 23, where we just kind of bounced around. These were weekly things between these blue lines, bing, 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 right? And then in 23, we just started this big climb up throughout 24, where we're up and to the right. And then we have this giant cliff, this giant fall off. And Russell is just something I love to trade. It tends to be a little bit more volatile. It tends to carry more premium. It doesn't seem to be priced as heavy as the S&P when it comes to things. So I love to trade the Russell. And where we had gotten to here on this trade. Now this is a weekly chart, so it's not very granular in here. But this zoomed in area of this more recent price action of things is where I started to get confident that there was something happening, and we were probably approaching a level of holding. And one of the trades, when I'm down everywhere, right, it's time to battle back. And like you said, things don't fall forever. But you know what? They do have elasticity to them. So you talked about not trying to, say, oh, this is a reversal, but you might want to scalp it when we were talking about that 10% up move. And when we went into this downturn, I said, we're going to have a face ripper of it's going to be so fast that if you're not in the market when it starts, you're going to miss the majority of the move. And so, last night towards the end of the trading day, I actually think I put it on maybe at 4 o'clock, maybe a little bit after, maybe it was a little bit before, I don't know. But we were trading around, I want to say it was like 1750, 1760, something like that. And I had marked down here these different levels of dailies of 1730, 1720. Worst case, I thought we might have a drawdown down to this weekly, 1660, which is big for the Russell product. But I said, you know what? I'm never, ever going to time the bottom. And we have had such an elastic drop, or such a big steep drop with no give back, no reprieve. I'm going to go all in on one full future Russell share. And so I put that in. That's a very large notional product. And I hung on to it. And I went down initially on the trade by a good chunk of change. But I said, look, it's not breaking my, I think 1700 was my bailout point, where I said, if I get to 1700, forget it. Maybe I need to step away. But this 10% move that we had today, I captured almost all of it because I was sitting in the trade, and man, did that feel good after all that downturn to be in there. Another trade that I had put on at the same time is your volatility index spikes, right? And I shorted that as well. So I shorted that and I put along on the Russell, and it worked out for me. But the call out that I really, really want to make to that is not, oh my gosh, look at me, I hit that thing. The call out I want to make is, these are the levels, right? And when we rallied back, we still haven't broken above this level, this 2020, ping, 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 not 2020 of the year, but 2020, the level on the Russell. So you know what? I'm out of the Russell, and I'm going to wait and see what happens. Just like Viper pulled up that S&P of where it sits, and we haven't challenged that. We haven't gained anything. So yeah, today everybody is saying, "Oh, it's so amazing. We're headed back to Amazing Town," but I don't know that we really are. I mean, I think there still is a very legitimate concern of we're not out of the woods. Nothing has fundamentally changed. But this is just a shout out to that price action, a call out to price action, saying, pay attention to that. Chart it in your spare time. Pick your favorite underlyings. So Viper, I just goes back to that. This news is just an accelerant of price action.
Yep. And I definitely can't stress enough exactly what you said about when you chart something, do not erase it. Leave it there. I mean, the only rare exception is if what you previously charted is clouding, it's causing like maybe you used a horizontal line that stretches infinitely across the chart when really you were just doing it in a particular section, like you had there on the ping ping ping. You used just the line so that way it didn't infinitely expand, because if it infinitely expands, then it's going to create this confirmation bias, or this bias where this might not be an important level anymore. But it's super valuable to have things left on charts. I run into that case so many times where I'll go back whether it's something big like Bitcoin or whether it's some tiny little stock that I don't even remember coming across before. And I load up the chart and I'm like, whoa, who was here? They nailed it. Like, who took this trade? Nobody took this trade.
God, I was so smart.
But it is in that moment, it allows you to do one of two things. One is either, man, now with the power of hindsight from the future perspective and not touching or changing my lines or anything, I can see that I was right and build confidence that way. But equally important is going back and being like, what the heck? This line makes no sense now in hindsight. Well, then it wasn't a good chart. It wasn't a good level to draw or whatever. And that's going to happen a lot. Like there are charts I go back to. I mean, we should do an episode where we just react and we just go back and watch the very first price levels video. I have not watched it. I do not want to watch it because all I remember is just this ridiculous grid paper of all these levels that I drew. And it's not great, but that's good at the same time. That's the process. Like you have to just throw stuff down there and understand the level at which you throw it down there, and then be real with yourself. Don't tell if you're too proud or whatever. Like, don't tell anybody else, but tell yourself, I don't really know that I'm doing this right. So you just throw it down there, and then as long as you understand the context of I don't really know that that's right, then you won't be tricked into making a big trade on it. But it's still super important that you just throw it down there and see what happens. So that's definitely just as important as all the position sizing and whatnot, is just throw some charts down and see what happens on them to better hone that skill, because it is a very, very important skill.
Yep. And that brings us to the end of this week's episode. Really, I think the takeaway here from this episode is, we don't get to choose the markets that we trade in. And the markets, they are going to be as turbulent or as calm as whatever it will be. But the reason that we can succeed or fail is how we trade that market that we are given. And I think really understanding the products that are in your toolbox for your disposal, what are you comfortable trading? What is your risk tolerance? What is your position sizing, right? All of these basics that we talk about all the time, they are the core fundamentals of what you use in any given market. There's my strategy that I'm comfortable premium selling, right? I have to protect for certain downtrends, right? Viper is getting into premium buying, which is fine. That's what he's comfortable with. And each of us deploy the tools in the manner at which we're comfortable with. But I also know there's more than premium selling, which is when that market was down, I knew that there were some other things I could do. I could long and short indexes, which I did, because that's what the conditions of the market called for, in my opinion, for my trading style. When this market was dumping, I was looking at puts to sell. Well, this market was dumping. Viper was looking for puts to buy. Was he right and I wrong? Was I right and he wrong? No, we were both right, because it's our trading style and we each understand the mechanics of what we do. We are comfortable on our risk tolerances and our risk comfort level, that we are okay in that. And that's really the big takeaway here, is that trading is what you make it. Trading can be whatever your comfort level is. You don't have to follow me. You don't have to follow Viper. You don't have to mimic us. In fact, if you're doing that, you're doing it wrong. You're not finding your own style. You're not finding what makes you comfortable. Now, maybe you click with my particular style and you want to learn more, but you add your own flavor to it. Wonderful. Maybe you click with Viper. But the point here is that everything that has happened was all based and able to be navigated with those core fundamental blocks. And it is imperative that you have the trading psychology and the mental fortitude to deal with whatever that can throw at you, because when you are massively up or massively down, it is going to mess with your head. I promise you it will. And I don't know, Viper, I really just think this whole 5 days of tariffs, it really just kind of highlighted what I've spent and we've spent, 4 or 5 years kind of just chatting about, like validation. Like, yeah, this is real. And we took a lot of these skills and we pieced them together. And are we over? No, we're not over. There's incredible amounts of volatility that come up there. So hopefully you took something away from this, an inspiration, a thought, a nugget, anything like that. One thing is for certain, there is more volatility and turmoil that will be ensuing, maybe as soon as tomorrow. Maybe by the time you air this, the S&P will be at 3,000. Who knows? But either way, hopefully you can find what makes you comfortable and your trading style, and you can find trades out there to take. So good luck out there, have fun, and remember, think outside the block.